Welcome back. Let's talk about the state of the markets. We're joined now by Scott Ladner, Chief Investment Officer at Horizon Investment. Scott, thanks a lot for joining us. I've read some of your recent commentary. You refer to the pace of the stock market rally that we've seen over the past month or so as dizzying, and you say that market participants are assuming that the worst is behind. Not only is the worst behind markets, but the modest improvement in U.S.-China relations will become permanent. Are investors being realistic in that second assumption?
Look, I think certainly the hope is that they are, but none of us really know for sure, right? That's part of what's going on here. Is we're still dealing in an environment of intense uncertainty, and we're still dealing with with an administration that that can change its mind fairly quickly on either side of this, as we've seen many times. But it is in both countries' best interest that we end up figuring this out at the end of the day. And so I think the hope is that cooler heads are starting to prevail in the White House and in the administration. And so, specifically, I'm talking about the more times we see Scott Bessent on TV relative to, either Peter Navarro or Howard Lutnick, that probably means that the cooler heads are prevailing in that battle internally, and that does bode well for continued U.S.-China relations to start to improve, at least from what was a very bad starting place.
You also noted that you'll be watching for global PMI readings for the month of May. This will be the first reading, you note, that might take into account the reduced trade tensions between the U.S. and China and elsewhere around the world. Have those numbers landed yet? And what would you be expecting if and when they do land?
They hadn't been, and it's not just those, Paul. I mean, we really have to look at a sort of a compendium of some of these soft data indicators and some of these survey indicators, and figure out if are we getting kind of a change in the mood of people? And because the thing that the soft and sort of the soft data, either PMIs, ISMs, survey data, however you want to cut it up, things that don't necessarily reflect hard economic data or earnings data right now, that has been universally terrible. There's a very sour mood out there for folks. That is not translated, obviously, into either economic downturns or into market downturns in any meaningful way. And so we're still watching to see if we can get that turn, if we actually get everything agreeing at the same time. The hard data, which has remained strong, are pretty good, pretty robust. We can get hard data that is robust with soft data that is turning up and actually getting a better mood in the environment. That actually provides sort of the next leg in the rally. But we're all waiting pretty anxiously to see if we're going to get some of that post the China news.
And I should have noted, of course, that PMIs are purchasing manager index numbers, a reflection of the views of important purchasers at large companies around the world. What about this heavy move into high beta stocks, back into the Mag 7 tech stocks and so on? Is that durable?
I think it's durable. I'm not sure about it. It makes some sense to us, and it makes some sense from the standpoint that these are still companies that are producing a tremendous amount of growth. They're producing a tremendous amount of money, and actually they are probably the safety plays in this market. If we do get a downturn, we're not going to get a downturn that's associated with really high interest rates, most likely, like we did in 2022. That in an environment with very high rates or high and rising rates plus slowing growth, like that's not a great environment for some of these tech stocks with obviously very high multiples. But an environment where you have a slowdown, slowdown in economic activity, it's a company with Fed cuts, which would be the expectation. That's actually a pretty good environment for some of the mega cap tech names, because they are still, they're doing the thing which is scarce. They're producing growth in a growth scarce environment. That's why they end up being a safety trade throughout much of the last 5 or 10 years. And we expect that kind of trend to continue. So I don't know they have to necessarily lead the market, but they do need to participate in some way. So durable, I'm not quite sure about, but I wouldn't expect a major reversal out of those just because they can play both offense and defense for your portfolio right now.
One thing we haven't talked about is the tax cut legislation that the Republicans are trying to get through Congress with, and it's been difficult to achieve progress there. There are sharply different views within the Republican Party on Capitol Hill of the nature of tax cuts that should be passed. How important is that to investors?
Well, I think the only way it becomes important, Paul, is if it doesn't happen. If it doesn't happen, if we don't figure out a way to get these tax cuts extended, then you're looking at a massive tax hike. And so then investors are going to be facing like two massive tax hikes in 1 year. The tariffs are a massive tax hike. Tariffs are taxes, and so they are going to be higher. Like they're going to be not as bad as Liberation Day, most likely, but they're still going to be much higher than anything we've experienced in most of the last 100 years. And so if we get both the tax hikes from tariffs and tax hikes because we let these tax cuts expire at the end of this year, that's going to be probably a mountain too high to climb for most investors, and for the market in general. We don't think that's going to end up happening. We think that these politicians tend to figure this stuff out at the end of the day. They don't do it very quickly. They don't do it very soundly, and they don't do it in a way that engenders a ton of confidence in the process. But it usually ends up getting done. And so I think the market is assuming that it gets done, and so I don't think you get a massive positive surprise or positive kind of upside catalyst from tax cuts getting passed. You would see a pretty big negative catalyst, though, if it does end up falling apart at the end of the day.
Scott, thank you so much for your insight. That's Scott Ladner, Chief Investment Officer at Horizon Investments.